Zillow is now saying that new home buyers are doomed as high rates have forced some sellers to cut prices. Whoa, it's not like I didn't talk about this last year on my channel, saying that headwinds and pain were coming to the real estate market. In fact, I said how the media is always late to the party. See, the media will always say everything's fine and dandy until the very last minute when they say, uh-oh, things are not good. Now, this article says that new home buyers can expect to spend about 13.5 years in their house before breaking even on their investment, said a senior economist at Zillow. Now, I find it very odd how the same company that last year was telling you to buy, doesn't matter the price, there's low inventory, is now all of a sudden telling you guys, hold on, things are not looking good. Now, we also have this article from Fortune saying that the housing market is starting to crack and sellers are cutting prices at record levels. And so this is why on this channel I talk a lot about paying attention to the fundamentals and of course the macroeconomic environment and not putting too much value on what's coming out from the news. In fact, I talk a lot about this on this channel in regards to the stock market. However, the concept actually still applies to the real estate market as well. In fact, when you take a look at the macroeconomic environment, high rates are very bad for the real estate market, and that's just a macroeconomic problem. The fundamental problem is affordability. See, in real estate, there's the price to income ratio. And so essentially, when home prices are high, but incomes that people are making are not as high as the home prices, well, that means that people cannot buy homes. And so while everyone was telling you that the price increases that we saw from 2021 were going to continue and homes are just going to continue skyrocketing, I was the one telling you guys, hey, let's get back to reality. Now, last year when I was talking about this, everyone kept telling me, but Justin, inventory is historically low, and so that means prices have to go up. And look, supply and demand definitely plays a huge part in the real estate market. It's part of the fundamentals. However, you have to understand, if inventory is low, but demand is also relatively low because a lot of people are priced out of the markets, well then low inventory doesn't really matter if demand is even lower. So unfortunately, a lot of people got swindled by shady realtors telling you, don't worry, prices are gonna forever go up and you're gonna continue becoming richer and richer and richer because your home is just gonna skyrocket to the moon. However, you have to understand that is not the reality of things. Now look, I think that buying a home is one of the best investments you can do, but that doesn't mean it doesn't come with its ups and downs. You could buy a home at the peak of the market and lose a ton of equity and go underwater, right? It's the same concept with the stock market, right? It has its ups and its downs. However, yes, if you look at things from a bigger picture, right, then things look great from a longer stretch of time. Now, of course, if you invest in the S&P 500, even during the height before the Great Depression, after a long period of time, you'll still make a good return on your investment. It's the same thing with a house, right? But that doesn't mean that you can't go underwater. And so some individuals may be fine if this is their forever home that they recently purchased. However, some individuals, right, statistics show us that people move every 5 years on average. And so some individuals who bought at the peak of the market who are now heading into an underwater environment, losing a ton of equity, well, unless they stay in that place for a long time or rent it out, then they are pretty much out of luck.
You're screwed.
Now, we also have this article from CNN saying this is the least affordable housing market since 1984 and it's getting worse. Now, first off, although I personally don't like CNN and a lot of other news outlets, I have to agree with them on this one. In fact, I just recently put out a video just a couple of days ago talking about and showing you guys the charts of unaffordability and how this is skewing the fundamentals for housing, and eventually prices are going to start coming down. And this is exactly what we're seeing in a lot of markets. Now, of course, we have to understand that real estate is very local, and so every market is different. For example, a lot of the markets on the West or in the West are getting destroyed. However, the market that I'm in, Florida, is actually holding up pretty well. But Florida is very unique, as you have to understand that Florida has the #1 international demand. A lot of Western Europeans love Florida. A lot of people in the States love moving from New York to California or other high tax states to this low or virtually no state income tax state like Florida. And so Florida is very unique. However, I'm seeing even in my local market, prices are coming down. A lot of sellers are very motivated. And when you take a look at the recent consumer credit report, we're seeing that US credit card debt is still holding above $1 trillion. And so what this is basically telling us is that people are living off of their credit card. They are racking up debt, and this is not good, especially considering the fact that not only are interest rates much more higher, making it much more difficult to qualify for a home, but a lot of individuals won't even qualify because their debt to income ratio, their DTI, is through the roof because they're living off of credit cards. Economically, things are challenging for a lot of Americans. And so this is forcing sellers to have to cut down on their prices. And so this is why it's important to talk to individuals who know what they're talking about and have their best interests out for you. Unfortunately, as I mentioned earlier, realtors don't have your best interests in mind. In fact, a lot of these realtors at the height of the market, right, they showed a lot of individuals overpriced shoe boxes that were just horrible prices to buy into because they only cared about their commission being higher. And so at the end of the day, you have to understand that the realtors have their own incentive in mind. And in fact, a lot of these realtors are not really investors themselves. And so a lot of them, to be honest, don't really even understand the macroeconomic environment or really understand real estate itself. They just know how to buy or help you sell a house by not even doing a contract, because they don't even do the contract. They just fill it out. And so unfortunately, a lot of people got led by these realtors who are really just wolves in sheep clothing. And so this is terribly bad and unfortunate. However, for those that stuck by the sidelines, as long as you make sure that you're paying down your credit, you're saving up for your down payment, and you're actually sitting on the sidelines with a purpose, then this is actually not a terrible time for you, because at the end of the day, there are always inefficiencies in the markets, meaning that there are always opportunities for deals. And so you could find a wedge deal. Unfortunately, a lot of people don't do this. They go with the realtor who tries to show them the best of the best house. However, what people actually need to be doing is making sure that they're really building themselves up, continuing to stay employed, saving their money, and look for that wedge deal where you see that house that's slightly lower price simply because maybe the kitchen isn't remodeled or maybe there's some stress on the property. However, this is good because it insulates you from prices coming down, because if real estate prices come down another 15%, but you bought your house that was much more cheaper than the median price in the market, well, it insulates you, because then eventually when you renovate that house, you actually build yourself some more equity. But a lot of realtors, they won't tell you that because they don't care. Now, I say this because it is the honest truth. Now, look, I have a background in banking. I talk about the stock market oftentimes, but I also want to disclose that I do also have my real estate license as well. However, I primarily use it just for myself, to represent myself or any friends or family who are trying to buy, sell, or rent, and occasionally some individuals here on YouTube as well, as there's a link for you guys to fill out if you are looking to sell or if you are looking to buy. I could help you out with that. But the truth is, yeah, a lot of these other realtors who are licensed, look, let's be honest, they really don't know what they're talking about, and they only have their own incentives or motives in mind. But look, guys, at the end of the day, you just have to do whatever you see value in for yourself and your overall family. And I'm just simply stating what I'm seeing take place in the overall real estate markets. And so essentially, I'm just trying to give you guys a warning that perhaps you want to take a closer look at what's actually taking place, fundamentally and economically, and not just pay too much attention to the news, because as you can see, the news will say one thing and say everything's all Cheerio, and then at the last moment kind of switch up and say it's kind of looking bad. And so that's essentially all I'm saying. At the end of the day, hopefully you guys found some value in this video. And before you guys go, make sure to check out this next video right over here, or also consider checking out this video right over here. I'll see you guys on those next